Katerina, good morning. Been a wild start to the year, really almost two completely. January and February were awful. March looked pretty good. Huge rebounds for big tech. What are you advising your clients to do right now?
Brian, thank you for having me on. It certainly has been a wild ride. And we went into the end of the year having certain risks on the table. We were concerned about earnings valuations. We were concerned about the fact that Fed was about to start tightening. We certainly were paying a lot of attention to inflation. And of course, war in Ukraine amplified all of those risks. So this is an unprecedented time. Investors should pay more attention to their portfolio than ever before. In the view of Mike Wilson, our Chief Investment Officer, this is the tail end of the market cycle. So if we indeed are in the bear market, the question is, how do we navigate it? And that's what all that we have been talking to investors about, is navigating bear market rallies.
And I know that there's a lot of blame that wants to be placed on the war in Ukraine, but here we forget even recent history, and that is the stock market fell big in most sectors in January, Katerina, and that was before the war began. In fact, most research reports on Wall Street did not expect a war to happen in Ukraine. So the market was weak well before the war began. There had to be some kind of fundamental reason for that. And I assume, Katerina, that reason has not gone away. The war, as horrible as it is not the cause of stocks falling in January.
Brian, I cannot agree with you more. We had the risks, all of the risks that we were dealing with on the table. The post-COVID, the recovery, when we look at last couple of years and how hot the market got, and we started calling for the market correction for about 10% decline right around the summertime. Because when you think about it, when you looked at the earnings and the fact that we were fully expecting that the earnings revisions coming into this year, and when we started really considering inflation, as a threat that it is, not transitory inflation, not transitory in nature, but in fact, inflation that is here to stay. All of these are issues that, we're here going into the beginning of the year and are still here to stay. In fact, Ukraine, it just introduced that additional amplification to the risks that we've had. So what now? Now Fed is going to be taking action more aggressive than we ever expected. Now investors have to pay attention to the makeup of their portfolio more than before. And this is definitely a market where money can be made and where we can be profitable, but this is not the time to invest in market indexes. This is the time where we have to look very
inflation. Inflation was already burning the war just through gasoline and certain parts of that fire, Katerina. So what do we do? What's a good inflation? If we don't think that inflation is going away anytime soon, and I'm not sure anybody does, war or not, what's a good inflation hedge?
Well, Brian, you mentioned real estate. And in my opinion, one of the best inflation hedges is real estate, because you have pricing stability, you have ability to increase rental income, and generally it's used as a safe haven sector. Gold historically has done really well too, but in my opinion, I would take a yielding asset class like real estate versus a non-yielding asset class as gold any day.